Mr. Patel.
Is that you playing the music?
That's me playing music, man. How are things?
Got it.
We hopped right in real quick. And he exited himself out. Well, everybody, hello. Welcome to Cashflow Chronicles, where we don't know how to use the software yet. I'm Matt Money, a.k.a. Matt Farley, and this is Chris Patel.
Man, sometimes StreamYard is stupid, man. There's like one thing that it's like log on to your StreamYard, and then the other one is onto the chat. And the thing is, I like being in the chat, so I have to log on separately.
Yeah, you can blame it on StreamYard. I get it.
Yeah.
No, I'm just messing with you, man. Hopefully,
Beep needs to drive carefully. Beep.
Yeah, where's she? She going Beep Global?
No, she's coming home. She was actually at work today, so I'm gonna get a little bit upset at her right now. I told her she needs to remain anonymous because there's so many weirdos out there, and now everyone knows who Beep
There are
Beep
some
is.
weirdos.
So now I have to tell her. Number one, she's technically not supposed to be watching my streams anyway. Like, I want to separate that part of our life where she wants to be a part of it, where she's like, oh, I'm paying attention to my husband, what he's doing, blah, blah. But I kind of want to be like, just isolate yourself against all that stuff. Be your own separate person, She is like, I am anonymous.
I get it.
Nah, bro. I don't want. Like I said, I'm gonna have a serious talk with her about her.
Beep might go to sweep or something like that. She has to change the username. But
yeah, and the other thing is, I can't be me if she's on, if I know she's watching. So
yeah, she'd be like, who's this other Chris that's acting all hard, because we know
it's like
Chris is a sweetheart. Chris is a sweetheart behind the scenes. We all know.
It's like when you're in school and your parents are there, like you can't be yourself. Like maybe I'm the troublemaker and I need to have like a little bit of autonomy. But because I know she watches and all this other stuff, I'm a little bit more contained with my language sometimes, I guess.
Aww.
Whatever.
See?
How's your trip?
Trip was good, man. Got a lot knocked out. I wanted to be able to do a stream, but it's so interesting. It's 6 hours ahead Central Time, so 5 hours from you. And just that small difference makes it pretty difficult, because if you think about it, it's like by the time the market closes, it's like 9 p.m. And so it's like, Amit's doing his stream for me at 9, starting at 9-ish and then ending at 10. And it's like, if you want to do a stream, that means, you're going to have to be on at 5 Eastern, and you're probably either sleeping or, you know what I mean? So it's just a little bit difficult to connect with folks when you're 5-6 hours ahead of time. So glad to be back. I got a lot knocked out. So from an accomplishment standpoint, really good. Was able to go out downtown, get some good Indian food. It was a good work trip. Met up with
Where did you go? Which country?
It's UK, obviously.
UK?
Okay. Yeah, London. So yeah, I know I always kind of undisclose it, but I think at this point, it's out of the bag. Everyone knows.
No. Keep it mysterious. That's fine.
Yeah. But how are things, brother? The market's doing really well this week. Anything particular before I just run down the list, or do you just want me to go after it?
No, just go after it. Let's go.
All right, everybody. Apple 227, Amazon 187, Dutch Bros pulling back to 32.32, Google back into the 160s to 163, Palantir 36.86, SPY near all-time highs of 570, Q at 486, Bitcoin hanging out just below 66,000, oil below 68, Western Texas Intermediate, and then Henry Hub gas creeping up $2.90. Everybody, if it's your first time watching, don't hesitate to subscribe so you can participate in the chat, or contemplate becoming a member just to support me and Chris's endeavors in doing this on a more full-time basis. Mr. Patel, anything before I kick us off with a good little hiatus on the intro?
Nah, go for it, man. Let's do the intro.
Greed is good. The stock is going to go up, down, sideways, or in fucking circles.
It's so good.
So it all.
Greed is good.
Huge upside potential, upwards of $60,000.
Oh man, I mean, Carlos has such good like videography skills, and then there's me who just is the
Hey, it
absolute
worked.
worst.
It worked. At first I did not like it, but then it worked out, and it's
well, you probably thinking like, let's make something super professional, and I'm just like, let me just throw together a bunch of video clips that I know are absolutely hysterical. And at first I was laughing the whole time I was making. I wasn't like, ooh, people are really gonna think this is like really professional. I was just like, people are gonna think we're idiots, and I am an idiot. You're not, but I am. So it matches my persona really well.
You're not an idiot, man. Clearly, you're not an idiot. You got into Rocket Lab at $4, and you're making that's been your biggest winner this year, or is it Palantir?
In terms of total return, it's been Rocket Lab.
Nice.
Yeah. So and that was that was on purpose actually, because one of the things, Palantir has always been one of my bigger convictions because I've used the software for so long, and then when it started running, I was just like, no, like I had it kind of in the back of my mind. I wanted to get to 10,000 shares, and I never got there. Mm-hmm. And now looking back in retrospect, I was like, I'm not going to let that happen with Rocket Lab. So I made sure, and I was in a different place as well when I was building out Palantir, right? I mean, my portfolio has done really well over the past 2 to 3 years. So I think back then I was like, I never want to put more than 50 grand into a stock. Well, that obviously, with how the portfolio has done over the past couple of years, it's grown from, I don't want to put more than 100 grand into a stock. So who knows, after this Rocket Lab thing, it might be 150 grand. So whatever comes next after that. But so I put about 100 grand into Rocket Lab, and it's now my biggest individual stock position. Obviously it's behind my SPY, my S&P 500 positions, but in terms of like an actual individual stock, that's number one.
Yeah, I've been doing well too, man. This year has been a good year for the markets. So, hopefully that's the same with a lot of the people here. They've been able to kind of utilize some of the things that we've spoken about, and, ridden some of the waves. And basically, how are we doing on our portfolio? Did we get our little dividend payment?
We did. And I was kind of sad. I guess I'm so, what do I say? So blinded by normal dividend payments from like my portfolio that I saw our dividends coming through, and I was like, I think it was like 15 or 16 bucks in total, and I was like, that's it. I think this is bullshit. But then I'm like, keeping in mind, I'm like, it's only a $5,000 portfolio, right? So I can't be
zoom in. I can't. Let's see where we are.
Let's see. So this is in total value up top. So the positions up top are the highest weighting in terms of the portfolio, starting at 36% all the way down to less than 1% towards the values on the bottom. You will see we added something. Mr. Patel, do you want to tell them what we added? It's a small position, but it's there.
We added a position with China. We are picking up some Chinese large cap ETFs, basically. So let's talk about that today. Let's get the ball rolling on that. So this week, I've been always keeping a track of China, but this week was a little bit different. China came out and basically said, we are going to do everything in our power to support our markets. Stock market, property markets, the individual consumer. I mean, the amount of money that they're going to be throwing at this whole thing, it's just out of this world. And on top of it, it's an open-ended money throwing session. It's crazy. So just based on the setup that we have here, makes total sense to be in China, even from a risk adjusted basis. If you think about it, their markets are sitting at I would say almost like a decade low at this point. They haven't had a lot of growth. Their GDP is slowing down, which is not good for them, but it incentivizes more spending on their point fiscally. So number one, ton of short interest in China. So there's a lot of hedge funds that are shorting Chinese equities, and it's been a good trade so far. Number one, so a lot of short interest. Number two, valuations on a lot of their companies are in the single digits. You have to be very selective on which ones, but basically, like if you look at the market overall, I think it's trading at like a PE of about 10, right? Normal PEs are about, like fair, I would say, is like 15. And then, if anything goes above that, it's kind of, you're going into la land. So right now, you're looking at a great setup with short-term what is that thing called? Short interest being really high. Another thing is a lot of stimulus coming, and PE is really low. So just from a technical standpoint, it's a great place to be from a value perspective. Um, some people are a little bit, what's the word? Like a little bit cautious against this, primarily because they've been burned in the past. The Chinese government has kind of come out and said in the past, like, oh, we're going to support the economy. And the thing is, a lot of the stuff that they've done in the past hasn't necessarily worked out very well. So if you go like do a 1-year chart, right? So you see that
China.
Yeah, you see that blip right there, the one in the middle, that giant rise right there in May. So a lot of the talk that they had, a lot of the shit that they were saying, that led the market higher, but then nothing really came out, and boom, they came back down again. This time around, it's not like that. But the thing is, there's so many people that have already kind of been burned a couple of times by the talk. People are like anti-China, and I don't know, dude. I it's never good to kind of bet on something that that's been burned in the past. But this time around, I think it's different. Famous last words, right? Like this time's different. But this time definitely is different. So we'll see what happens.
Yeah, I mean, just to get people's eyes into it, right? Chris was talking about how we're kind of at really, really decade lows.
Do FXI, because I think that one is a little bit more accurate. Like that's like their version of our SPY.
This is so to get people's eyes into it. So this is the total market cap weighted for all Chinese shares. So you can kind of see we're kind of matching towards what it was back all the way in the 2011 timeframe, and then FXI is more the large cap.
Yeah. So if you look at us, S&P 500, those are all the large caps that we have. So for China, this would be the equivalent. So MSI is the total market. This one is market cap, but it's large caps. So this is like the best companies in China.
Yeah. So this is going back the past 5 years. So it was tracking at about $40, and then obviously earlier this year, 2024, it was around 21, so about 50% off of that, and now we're shooting up from $25 to mid 30s here. So the hope is that we continue on that sort of trend.
See, the good thing is, do that 5-year chart real quick again. See, the thing is, this entire period that you're seeing where it's been like, oh, this has not been a good performer. If you had bought this 5 years ago, you'd actually be in the negative right now. The thing is, all the companies that are in this index, they've been growing. They've been reinvesting the money. It's not like these companies have been stagnant, not growing, not growing their top bottom lines. These are great companies that have been doing more and more. So if you look at the profitability on a lot of these companies, the earnings that they have been growing considerably, but that just hasn't been reflected in the total stock price, right? So it's almost like sometimes the market front runs earnings, and then sometimes it doesn't recognize the value, right? So if you look at a company like let's say Rocket Lab, a lot of people are riding on Rocket Lab based on, hey, I think the earnings in the next 5 years is going to explode, so let me buy it today. Right. So everyone is front running a lot of that growth now. There's other times where the companies are growing, but people are just not recognizing the value and saying, you know what, just because they're growing, whatever, I don't want to be in China, and they're avoiding it. So I think there's been two different things. So when you're looking at it from a growth perspective, you're basing your things on growth. When you're looking at it on value, you're basing it on value. And so if for me, this is a value play,
Yeah, so I think I've held on to Baba for quite some time. I mean, Baba's been one that I've been down on. I think I have a cost basis of like $180 or something like that. So in terms of that, I'm still down like 40% or something pretty awful. And the only thing that's really been the saving grace is that they started doing an annual dividend, for me at least, and also doing some of these buybacks. But you can see it's been nice, because I was hoping to start dollar cost averaging in, and then I just never did. Got fearful that everyone said it's going to go to zero. It's a variable interest entity, meaning it's kind of operated out of the Bahamas, and it's kind of like, because obviously the United States Stock Exchange can't hold actual Chinese shares. You have to create like a separate entity based out of the Bahamas that owns the shares and then obviously the United States entity owns the Bohemian, whatever entity, and then anyway, so it's a pretty interesting sort of dynamic. So everyone's just like, you don't actually own the shares and it's going to zero, blah 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 blah. I mean, there's a lot of speculation associated with it, but I've always admired Alibaba because if you think about it from a cloud perspective, they still have the vast majority of the Chinese cloud industry, and I think that has yet to be completely realized. And if anybody's going to win when it comes to that, it's probably going to be Alibaba. So I anticipate as cloud continues to get better and better globally and more used globally, from a small mom and pop shop all the way to the big corporations, Alibaba's going to continue to do well, and they just have a crap ton of cash. So we'll see. I have I don't know how many shares, but let's hope that it continues to meet up so I can eventually get some of my cash back.
Yeah, I think you will, man. I think China, for me, this is a trade, not really like a long-term thesis, where it's like, I think the Chinese are going to be the greatest country on the planet. Like, I just think their markets are really overvalued. There's a lot of stimulus. So you don't have to necessarily like the politics of the equation, but you do have to find that there's value there, and then you have to just be a little bit intellectually honest with yourself and say, like, hey, listen, the value of this specific thing could be, a little bit, rich, or it could be very undervalued. And I think right now the Chinese market is undervalued, and a lot of investors are probably going to be recognizing that over the next coming probably like 6 to 12 months. And a lot of money that's basically sitting in US markets, which, by the way, the US markets on a PE basis are a lot more elevated. So, in order to make money, you have to buy things when, they're not as interesting. You have to buy them when no one wants to buy it, unfortunately. And I was on, it's funny, I was on Amit's stream, right? Let me tell you,
what is that guy now?
No, I mean,
he's in the chat. That's why I said it.
Yeah, the amount of hate comments about China, like, damn, bro, like,
really,
y'all, like, oh, you fucking
propaganda,
communist.
Man.
It's all
propaganda.
It's so funny how some people can come out and says, okay, just because you're investing in China, you're a fucking communist. You support communism. I'm like, no, I'm doing the most capitalist thing. I'm allocating money to basically make more money.
There you go.
A communist wouldn't do that. A communist would be like, no, we need to redistribute the wealth, man.
Yeah, so man. It's propaganda. At the end of the day, it's 1.3 billion people, something around there. I'm gonna get the number wrong, and
1.4.
Somebody's gonna exactly. There you go. Somebody's gonna chime in and tell me what's really right. But if you think about it, I mean, that's it's a huge percentage of the world's population. It doesn't make sense to completely ignore it. And anyway, I was actually checking to see how the Nifty 50 is doing, because that's you were talking about the S&P 500 equivalent of China. This is kind of their equivalent index, right? It doesn't have 500 companies; it just has 50. But I was wondering if they fell over, and it doesn't look like they ever really did over the past 4 or 5 years. So other than 2020, but these guys have been on a run as well.
I'll tell you right now,
I was hoping they would have a blow off.
I'm Indian, and I do not want to invest in India. Okay, if you want to see fraud at wholesale, you find Indian companies. Okay, Indian companies, for the most part, I would say about 1/3 are probably over-reporting their freaking shit. Okay,
yeah.
There
not
are
only that,
so
but the
many...
PE ratio, I think, for the Nifty 50 is sky high as well, I think.
Yeah, the level of corruption that's out there in India is unsurmountable, and you just need one election. Let me tell you how that works in India, okay?
Oh,
you
10 gifted memberships. Thank you, my guy. Much appreciated.
You get in power, right? And then you start basically charging all the companies like, hey, listen, if you want to do business, you're going to have to pay me, right? And then it starts at the local level, okay? And it like goes up the chain. So the way that it works is like, if you're at the bottom, you gotta pay that guy, and that guy kicks it up to the guy above him, and then that guy kicks it up to the above him, and eventually it flows all the way to the top. Now, here's the thing: if you pay, things are okay. Like, you can do business.
Right.
The problem is when an election happens and then a new party comes in, now you got to pay a whole bunch of new motherfuckers, because that's when election happens. Like, if the party gets turned over, now you got to start paying them. And the thing is, like, if you go and say, well, I paid the last guy, they're like, no, I'm the new guy, and you got to pay me now. And it's like this continuous cycle of pay me. And a lot of people look at the Indian markets and be like, oh, there's such a large market. I don't mind paying the bribes to, basically do business. But long term, it doesn't work out very well. I mean, and that's one of the reasons why India's always been a third world country. And in my opinion, there are like glimmers of hope here and there where India does start to rise. But then you always have these waves of politicians that come in and set the country back 50 years again, and then another few years, and so it's this rapid like improvement, and then things come down, improvement, and things come down. And if anyone, and by the way, I love India. Okay, India is like, I was born in India. I love India, but I just don't like the politics. All right, and the politics, you think that we have it bad here with a divided government, bro? India is on like a fucking another level. So
I'm trying to go, man. I need to go. Maybe I'll sneak into Amit's bag. He'll go over the weight limit for his bag, but at least I'll get over there and be able to experience an Indian wedding.
If you do go, I'll give you 3 pieces of advice. Number 1, do not drink the water there. Like you better drink your like bottled water. I can drink the local water because my immune system has built a tolerance to like the crustaceans that are in the water. But I can tell you, Matt, if you drink the water, you are gonna die. Like you're probably you won't die good. Because like I mean modern medicine has come a long way, but if you go for a month, you'll be sick 3 weeks out of the 4. So
100%.
Number 1, don't drink the water there. Like if you do drink the water, you gotta drink like bottled water that and you gotta make sure the motherfuckers actually like crack open the top because people will refill bottles too. I mean, I'm just letting you know, and I know my Indian brethren that's on here. Y'all you're gonna be like, either you'll agree with me or you're gonna be like, holy shit, like this guy's like letting out our secret. You can't hide this because you're white, of course. Me, when I go there, I speak pure Gujarati and Hindi, and I speak it like fluently, so motherfuckers won't like jip me on the deals. But whatever price they say, you be like, no, that's not the right price. What is the real price? Okay, the first price that they tell you, like, oh, this product is 100 rupees, bro. It's not 100 rupees. Just get that in your brain, like. And that's how like the system in India works. They start at the high price, and it's almost like expected that you negotiate with them.
Yeah, it's a haggling culture. Yeah,
but let me tell you,
bartering culture. Is it bartering? No, bartering is when you exchange for something else. Haggling, yeah,
always bargain. And the last thing is, if you see people on the street, like poor people, they'll beg you for money. They see you, oh my God, the white savior is here. Like they'll treat you like a king, but they'll expect something out of you. So here's the thing. I don't mind.
Sorry, go ahead.
I don't mind you giving money to people, but if you give money to one person, 3 more will pop up. And then if 100%. You give money to those 3 people, 10 more will pop up. And then you're going to have a crowd be like, look, white Jesus is here to save us from poverty. So just don't give it to that one person. That's it. And you'll be fine. Just, and they'll leave you alone.
When I was living in Trinidad, it was during the pandemic. And so I had to line up to go to the grocery store because everyone had to wash their hands before they went to the grocery store. And it was perfect for homeless people or beggars because they could literally just walk up and down the lines and people had to be standing there. It's not like they could ignore them because if you leave, you lose your spot in line. You can't get groceries, right? So perfect for people. So I kept going to this one grocery store, and every time this one guy saw me, he was like, knew I was American, obviously would come up to me. I was obviously different than everybody else. So he would come up directly to me and ask me for money. One time it was a new person and they were like, are you American? I said, no, I'm Canadian. And they said, oh, and they just walked away. And I was like, what kind of bullshit is that? Like, if I said, yes, I'm American, are you going to ask me for money? But I said a Canadian. So he just walked away and I was kind of like flabbergasted. And so it was actually very interesting. Anytime people would ask me if I'm American, I said, no, I'm Canadian. And nobody would ask me for money afterwards. It was the strangest thing. And I mean, it was only for another month or two because I think by that point it was towards the tail end of the pandemic. And after I almost went home, but I was like, what is it with Canadians and not asking for Canadians for money? Anyway, I just thought that was really interesting. But yes, very very different cultures. Trinidad was fun, but I want to go to India because that's like legit.
India is not for beginners, bro. You need to go to some of the outlying countries first. Okay, exactly. India is like the final boss of Asia. So I would say first you need to see like the first place you go to if you are going to go to an Asian country is Japan. Like Japan is you could get there, everything is going to be normal, whatever. And then you have like the South Koreas of the world, right? That's good. And then China would be like your like level 3 that you could deal with. And then of course comes like the Southeast Asian countries. Probably Singapore you could put next to Japan, but all the other ones that are outlying it, like Malaysia, Indonesia, all of those things are like level 4, right? And the Philippines is like number 5. And then comes India, which is like level 6 and 7. And then, of course, like if you really want to experience like culture, you go to Bangladesh. Like that's where that's yeah. I mean, right now they're going through a lot of shit right now. So Bangladesh, Sri Lanka, and Pakistan is like the last, like that's like the final boss. That's like you've already made it past India, and the rest are just I don't know, bro. I would Matt, you better go with someone. Like if you're gonna go to India, you go with me. And like this way, no one will fuck with you, because the thing is, like they'll be like, "Oh my God, my brother!" Like, no, you're not gonna sucker my white friend over here, Like, don't do that. So you gotta go with someone.
I was initially I was afraid to move to Trinidad, and because it's a different culture, right? Like, and I was like, and so it took me about a week. Like, I was good after about a week. I was like, okay, these guys drive on the opposite side. I was like, they still had pretty much a lot of Western sort of chains, right? So they still had like the McDonald's, Taco Bell's, everything of the like. So everything was still, and they speak English. So other than the markets being a little different, but I mean, you go to the supermarkets, and I was living in a very, I guess, more affluent part of the island. So I could get whatever the hell I wanted, no problem, right? The only thing that confused the crap out of me, which I had to text one of our interns at work, I was like, why is the milk not refrigerated? I was like, what is going on here? Right. Like I didn't understand pasteurized milk. So at the, that was the only thing where I was like confused, and I had to ask somebody. And they made fun of me, and they said, because our milk is lab grown, and I believe them for about a couple hours until I realized and actually researched it, that it's pasteurized, because I'm an idiot. So anyway, different story for a different day. But back to reality, back to actually making money, Mr. Patel. What do you think our portfolio is up year to date?
It's 52%. I think 2%.
52?
Yeah.
We were at like 59 last week.
We were at 59? I thought we were at 50. We're at 58. No, we were at 58%. You're right.
No, wait.
But then we added money.
Did I lose that? No, we were at 50. You're right. We were at 52% last week.
Yeah.
On the 19th?
Like, where's this guy getting? Where's this guy getting this? What are we at now?
I don't know. So we were at 52 last week. What do you think we're at this week?
53? I don't know.
60%, 61%.
Oh, all right.
Dude, it's getting pretty real over here.
What did it? What
I don't know, man. I wouldn't be surprised. We had a pretty good week from like the let's see, NEXT recovered a little bit, but I think it was really BPYPM.
Yeah,
because that's up 35%, and BPYPN we were hanging out at 1 or 2 so percent, and a couple weeks ago, and over the past few. Actually, let's check. I don't know if BPYPN shows up on
the cruise. The cruise lines also started to recover too. The cruise lines.
That's true. Too. Yeah. We trimmed a little bit of the cruise lines when they pulled back a little bit, it looks like, because I think Carnival was up around 24-25% a couple days ago, and now it's back down to 21-22% up, and then same thing with NCLH. So
HIM's recovered too. So a lot of them from that August low started to really get up there. So
this NEXT though, there's something in my portfolio that I'm gonna trim. Actually, there's 2 positions that are like borderline on the edge of being trimmed. I'm waiting for them either to get called away or to basically roll the covered call, or just like buy the covered call back and just sell it for 2 positions. And NEXT, man, I'm like, actually, I thought about it because I told everybody I was going to buy 1,400 shares of RKLB yesterday before I got on the plane. It opened up and it gapped up, so I never got actually those filled. So I was pretty upset about that, because it would have been a nice, I don't know what, couple $1,000 or whatever. But instead, I might take that 12 grand and just buy NEXT and just say, you know what, that's my position of NEXT, and it's 2,500 shares or whatever, and But at the same time, I know I'd rather get to 5,000 shares of NEXT, which is closer to like 20, 25 grand.
Yeah.
I don't know.
I might just take my full dividend payment that I just got from the preferreds and just drop it into NEXT actually. I think this is like a 20xer, but it's like something that I can just fire and forget, not have to worry about it,
Yeah.
So
it's, I mean, you got Uncle Ted on it now. You saw that. So
yeah.
So who the hell knows what's actually going to happen with it? I wouldn't be surprised. It could move very quickly in a Trump election victory. It could move very quickly.
It's interesting. I didn't realize it was almost 16. What is it? 16% of our portfolio now?
NEXT, is it?
Yeah.
Yeah.
Oh, interesting.
Yeah. What did we sell? What did we sell? We had a cash position. I forget what else we sold.
We sold some of the cruise lines.
You're right. We trimmed half. Was it half? No, it was a third of the cruise lines. Or was it half?
We trimmed about a third of them or something to get into that. I mean,
that's right.
The cruise lines are fine. I think long term they're going to do really well. It's just the thing is sometimes you're limited by the amount of capital that you have with new capital, so you have to kind of like reposition yourself to take advantage of opportunities. So 100%. I think NEXT's got some good prospects. Like it's like one of those decisions that's going to be coming down the pike where it's like it's either going to like 100% on us and it's going to double, or it's going to just stay where it is for like a long time.
Yeah. Hey, I can see a case where it's I could see a case NEXT stays at $4 to $5 for 18 months, and I could see a case where in the next 6 months it jumps to $8 again. Because you think about it, the catalyst is it's almost twofold. It's one, you're back on track with phase one, no problems, and then two, they're imminently going to sanction the fourth train, which, if anybody remembers, the fourth train has a higher economic interest than phase one. So it's like if you think about it, phase one alone is 200 to 300 million distributable cash flow. Really, the reason why people would be buying NEXT is for train 4 and 5, and hopefully maybe a train 6. I'm curious to see what the economics look like on a train 6. But for train 4, you're thinking that's an additional 400 to 500 million just on its own. So train 4 on its own is actually better than all of phase 1 from an economic value perspective. For NEXT.
But you need phase 1 to go through.
Exactly.
So you have the cash flow in order to do 4 or 5 and the other ones. That's the thing. Like it's almost like you're giving up a lot of stuff up front, but you're going to catch it in the back end. So my thing is once the first part comes through, it becomes more of a real investment for me. So now I can just dollar cost average. But if I find out that they're gonna, they're imminently cleared by FERC, which by the way, I think is literally going to happen. I think any excess cash I have is probably going to get in there and then just hold it for like forever, basically, because it could end up becoming, like I said, a 20xer with cash flows of about 100%. Like imagine getting a distribution on a company that you bought like 5-10 years ago, and now it's 100%, because that's what happens with distributable cash flow. As a cash flow,
that's the thing, man. Like that could end up being cash flow for all your cars for life. Like if you think about it, it's like, because this thing's going to be around for 30 to 35 plus years. It's going to be a long project, and so if you think about it in that perspective, it's like, okay, so what is that? It starts in 2028. Let's just say plus 35. So you're talking about between 2030 and 2060. You're probably gonna have more than enough for car payments, because I doubt that you and the boss lady are gonna be spending $2,000 a month in car payments. But on a quarterly basis, man, I mean, I'm assuming you're gonna put in 25-30 grand, maybe more. And if that's the case,
it'll be private jet money at that point.
I don't know that I'm in private jet money, but I mean, let me think. What do we think it realistic could grow to? I mean, I could easily see it being worth 20 billion.
With $1 billion in distributable cash flow, 20 times is not that expensive. I mean, you think about it, and especially like the business model is it's not dependent on the cyclicality of like prices either. It's basically a take or pay contract. So it's one of those things that like it's very early in the stages, so it's not worth like taking a huge position on, like, especially like 15% is a lot, by the way. I didn't realize it was 15% on our side, but still, like, we'll see what happens. Maybe we can make up the difference in other parts of the portfolio. So this way it'll slowly just move its way back down to the bottom, because that's what's happening, right? Your winners are the ones you want to keep doubling down on, and they rise to the top. And then you're kind of like your losers, they end up at the bottom. So you look at Celsius, you look at Accelera, they're all the way at the bottom. You see that? So This is like a perfect thing, which is like water the flowers and trim the weeds. But like right now, I mean, we don't have a lot of weeds to trim, So yeah.
Bitcoin is
my mom's calling me.
The boss lady. Now take your time.
Yeah.
When will you sell Rocket Lab and Palantir? Very far away from selling either. I mean, Palantir, I think you're getting a couple years of earnings up front, but the problem is, who knows what could end up happening. I think the market for Palantir and the value for Palantir is already way higher than I would have expected. So what should you do? Should you sell it? And it could be that they have a decent earnings report in the third quarter and people continue to go crazy and it goes to $40 or $45. I don't necessarily think that's going to be the case. I think people are going to be underwhelmed with what shows up in the third quarter, but I could be completely wrong, right? That's just only speculation. I don't have any evidence to show. I mean, the quarter ends in 2 days and I don't have any evidence to show that it should slow down less than 30%, but I think right now it's being priced as if you're going into the 30% year-over-year growth rate. I just don't think that's the case. When it comes to Rocket Lab, it's so much in its infancy. It hasn't even launched its most profitable vehicle, and I think that people don't even recognize the true potential of it. You have companies that have yet to even get satellites into space worth tens of billions of dollars, and Rocket Lab is worth like $4 billion after the run up recently. So it's like these guys have launched 53 vehicles into space, over close to 200 satellites. They build satellites for NASA. They build satellites for SpaceX missions. I mean, these guys know what they're doing. And at the end of the day, people pretty much value them as if they're a company that has like relativity, right? Who has only sent one rocket into space and is being valued at $4 to $5 billion. It's like, please tell me how that company is worth $4 to $5 billion, and Rocket Lab, who has launched 53 vehicles into space, is only worth $4 to $5 billion. It just doesn't make sense. So to me, is it going to go to $200 billion like SpaceX tomorrow? No, but it's vastly undervalued, and I think in the next 5 to 10 years, you'll be seeing it be aiming towards a $25 billion market cap, but I think it's easily in the next 5 years a $12 billion market cap. My price target by the end of 2025 for it is $15. But that, keep in mind, means that you have the Neutron launch vehicle. So if you don't have the Neutron launch vehicle, that'll obviously change. But I just think it's way too early for both companies to be selling. Mr. Patel, I know you hate Palantir. Do you hate Rocket Lab as much as you hate Palantir? You're on mute.
If I had to say, like, what's the next, next big thing, it's a tie between quantum computing and space, because I think there's going to be another run in like the space market where everyone's going to be like looking at space as like the next frontier. So, companies like Rocket Lab, which are, still at the bottom level in terms of infancy, they're going to get a huge premium boost, but it just depends when the market recognizes it. Cause I think we saw the early innings of something like that with ASTS, right? What ASTS kind of just skyrocketed. And then all of a sudden now Rocket Lab is. So the thing is, like, the investor mindset is always about chasing like the next big thing. So I think like space could be the next big thing. Technically, the next big thing was SpaceX, but everyone's going to be like, well, I can't invest in SpaceX. So where am I going to look for? I'm going to look for the number 2 and 3. And the number 2 right now is Rocket Lab. So that thing that you said, I was listening to your stream, which is if SpaceX is worth 100 billion and Rocket Lab is only worth like 2 billion, there's a huge gap between the two. So even a number 2 player could theoretically rise pretty fast and up there. you know?
Yeah.
So, and the other thing is when it comes to space, redundancy is going to be the key word. So if you're a business, you don't want to necessarily rely on just SpaceX. You kind of want to have like multiple organizations that you can launch with that can give you like pricing parity too. So it's almost like, you know what, you don't have to be invested in Uber, you could also be invested in Lyft. Now the thing is, right now, after the maturity is hit, you typically want to be in Uber because Uber is clearly the winner. But the thing is, all the way up until that's decided, people were buying Lyft hand over fist too. So I would say Rocket Lab is kind of like a strong number two. I don't see any other company being even close to what Rocket Lab is. You know?
Yeah, I think, and then people always ask me, they're like, what about Redwire? What about these other companies? It's like, I get it, but to me, it's like I have a bird in the hand almost. It's like, I'm not saying that there's always the risk, right? And I think a lot of people don't always evaluate the risk appropriately. There's always the risk that Rocket Lab, you know, turns the other way, doesn't manage their money appropriately. But the key thing is that they have in the past, and they have the same CFO that has done phenomenally. I mean, yes, they're still in cash burn mode, but they're not like other companies that just burn cash at an amazing rate. A lot of companies like Astra and many others have done so. These guys are actually, from what it looks like, and I think the numbers make it make sense, actually profitable if you discount the Neutron business, which they're trying to get up. But anyway, I don't want to spend the whole time on Rocket Lab, but congrats to anybody that watched. You know, it made me really excited. I checked in to your Patreon earlier, Chris, today, maybe it was last night, and I saw somebody was up over 6 figures on the position, and that made me really happy to know that, you know, we have that power and influence to help people in any sort of shape, way, or form. And this person said it was a pretty substantial part of their portfolio, like 15%. So to be able to move their portfolio, like 15% of their portfolio in that direction, makes me feel like I'm doing something worthwhile. It makes me feel like I'm actually, you know, contributing to the world a little bit, right? And I don't put a lot of stock picks out there. I mean, I think if anybody were to like listen to me and like see what are my picks, it's Palantir, Rocket Lab, Dutch Bros, and like TQQQ, right? And a lot of those are all 5 to 10 year sorts of plays. But you know, I don't come out with like a weekly thing, right? I mean, I might dabble here or there or anything like that, but those are my big swings. And it's cool to be able to see that people are eating off of that, and that made me really happy today. So really cool to be able to be involved in the Patreon and be able to see that.
Appreciate that, man. Quick question: when are we launching our fund now? See, now that you've got the capital for it, right?
I don't have the capital for it, man. I was just talking to Amit briefly because I passed out last night because I flew home yesterday and went to bed a little early because I was technically 6 hours ahead in time, but yeah, I mean, I was just telling him I'm like 10% away from the next million. So it's kind of cool to be able to get there. And hopefully we'll be able to do some more stuff. And my buddy, I was actually messaging my buddy yesterday when I landed. I was like, man, this Rocket Lab position's like 200 grand now. I was like, do I sell it and buy another beach house and like actually think about moving back to Pennsylvania or New Jersey? And he's like, nah, man. He's like, you have to wait. He's like, you got to wait till you can buy one of those things cash. He's like, he's like, it's way too early for a lot of those things. True. It's like, you could cut those things early, but like you said, why cut a winner, especially this early in the game? It'll be a lot of fun the next 24 months for that. But not only that, but the whole portfolio. I mean, I think you will see a pullback. I don't want to be unrealistic. I definitely think that with what's going on, especially, I think the next 3 months is going to be very easy to follow because the rate cuts are going to be what the rate cuts are. Whether or not it's 25 or 50, I don't think it's going to be too much of a surprise, but I think we can guarantee there's going to be a cut in November. There's going to be a cut in December. So that's pretty easy to predict. What I don't know is there's 10 meetings a year, right? Is there actually going to be 10 cuts next year? And I think that would be very hard to say. So I think that that's going to cause a lot of volatility, and how I play that, I don't necessarily know.
Yeah. I mean, I'm going to probably trim some of my SPY positions actually and buy more China. I just think there's more value in China right now. I'm not like going crazy and selling all my SPY, but I have a pretty good position in SPY right now. So I'm like, okay, you know what? This market's a little overvalued. Time to be a little bit more gingerly with it and just, hedge my bets. And I don't know about you. Like, have you considered hedging your Palantir position at all? Maybe taking some of it and just being like, you know what? Let me buy some puts. Or is it like
I sell a lot of calls. So I mean, there's that piece. And right now, I'm actually underwater on some calls because I think it's going to pull back, and that actually would be helpful, right? And I've actually thought about I actually wanted to ask you something like this. But to be very open with everybody, I think I have like $33 and $34 calls on Palantir. So currently they're underwater, but I anticipate eventually they'll pull back and I'll be able to get out of them. But what I was actually thinking about, so going back to being underwater on calls, I've actually thought about when you go into like the fund that we were talking about, like let's just say it's 70% SPY. Mm-hmm. We talked about this in the past. I know very early on when we were doing Cashflow Chronicles, we were talking about putting intentional drag on the portfolio to buy puts, right? And one of the things I was thinking about was actually the following. Do you almost sell covered calls in the money, knowing that on a monthly basis that every few months there's going to be a 5-10% pullback, right? And when you do that, eventually those calls will be basically increasing in value because you'll be able to buy them back at a cheaper value over time. And therefore, like, you don't, from a drawdown perspective, while you lose, it almost offsets completely with that covered call, if that makes sense, because it's in the money. For example, I have a covered call on my SPY that's underwater because obviously we've been on a killer of a run this year, and I don't think anybody would have expected to be. What are we up on the S&P for the year? We're up 21%.
I think it's 21
yeah. So I don't think anybody would have been able to kind of predict that 2 years in a row would be up pretty well. And we have been. So what I'm basically trying to get after is in days where that pulls down, it almost completely offsets because the delta on that particular option is so high. So it's like, even though the SPY is down, I'm technically not losing any money because my covered call is there. So I'm wondering if that's what a lot of hedge funds do, right? Where they just have so much money in like a SPY or something of the like, and they sell those options. But even when the options go, or sorry, the underlying market goes down, it's almost like it's not losing any money because of the fact that they have those hedges in place. But I don't know if they do that with buying puts or they sell calls, or a combination of both. And I was wondering if you had any insights into that.
Into like just how you would hedge?
Yeah, like how would you hedge? Like if you had a 60-70% position in SPY, like how would you hedge? Would you sell like in the money covered calls, and when obviously it pulls back, you're able to kind of buy those back at a let's say that pulls back pretty decently, you're going to be able to buy those back, very quickly.
I mean, for me, I can't say what they do, but for me, I just trim a little bit off the top and buy some puts with it. And that's it. Like if I have a 50% gain and I have to trim, like, let's say a 5% position from the top, take that and then pump it into the puts, then I would do that. On an off chance, you could also sell deep out of the money calls, but those premiums are never usually good enough to cover the puts anyway. So for me, I just slice off a little bit off the top and just cover the downside and just keep the top side, unlimited growth. Like it's almost like saying, okay, let's say you started this year and be like, okay, SPY clearly can't get 25% higher because we already had a monster run last year. So let me sell some covered calls, and I use those covered calls to buy some puts. Number one, now the covered call went against you, and now you're kind of like underwater because your total potential for gain is capped, but then also your total potential for loss, is basically the money that you paid is gone now, right? So a lot of people, what they'll do is do that. So me, I'd rather just keep my top unlimited and keep my bottom more puts. The other thing you could do also is use options to basically, like let's say right now with Palantir, right? Let's say your Palantir, you're up a lot. Now, the thing is, you could trim a little bit off the top, buy some puts, but then at the same time, also use some of that money to buy some calls, right? So just in case there is a monster run, you're not losing out, right? If it does go down, your puts are going to cover you, you know?
Yeah, that's a good point. I mean, the thing that I always have struggle modeling though is how do you take a small position, let's say it's 100 grand, and how much is appropriate to put into and what time horizon, right? Is it, do you sell every quarter? Do you buy quarterly puts? Do you buy 6-month puts?
I'll be honest, I'll do leaps. Leaps are always mispriced. Like you'll always find that leaps are mispriced to the upside and mispriced to the downside. So even though it feels like you're overpaying, you're not actually overpaying. Like you're just basically, and not to mention, you don't also have to deal with the transaction issue, like, looking at it ever so often. Just know that it's almost like, here's my question. Do you pay insurance monthly on a car? Be like, oh, you know what? Let me get insurance this month, and then the next month get a different insurer, and then another month get another. Like, no, you don't need to do that. Just be like, okay, what's the quote on insurance for the next year, right? And then buy your insurance. That's it, and figure out what your risk tolerance is.
That's a really good point, because I never really thought about it in that perspective. Because I think what ends up getting people, and this is why I like to sell weeklies or monthlies, because you generally can compound the premium a little bit more. But like you said, it's almost like going in reverse when you're buying puts, because if you, like, let's say if you were to buy weekly, you might have to pay 1% weekly of the position. And then over time, you're going to have a 1% drag every single week. But if you buy almost that put in advance for the next 2 years, it might only cost you, let's say, 20%. So technically, you're buying at a discount. That's something I never really thought about. That's a really good point.
It also depends on what the like. Let's look at puts right now for Palantir. Okay, like let's just intellectual exercise. So first of all, do you have a price target in mind which you think Palantir should be at?
I haven't really thought about it. Originally, before this S&P 500 inclusion, I was thinking between 27.50 and 30. But it makes me, with this recent bump up, it makes me want to say 30. So let's just say 30.
Okay, so the $30 put right now is going to cost you $6.23. Okay, which is, in my opinion, a little bit feels really high. But then if you look at on the call side on 30 is almost 15. And if it's way out of the money, I mean, Matt, this is where you would sell way out of the money calls, and then at the same time buy just the puts that you want. Like a $55 call on Palantir right now for January of 2020. What is this? 27. Look at the freaking call premiums. They're absolutely freaking nuts, man.
$7. Jesus Christ.
Yeah. $7. And then the one at the 30 put is so basically the way that you could do this smartly is go to the $55 call, sell the $55 calls, right? And then utilize some of those to basically buy some puts. And then you could probably use a little bit of money to buy some spreads on your on the current Palantir position. So just in case, you'd have to work it out mathematically. Like we'll go over that like out of the like offline, but basically you'd have to basically hedge against the risk,
Yeah.
Which is kind of nuts to get that much. I mean, $55 would put this company at at how much market cap?
Let's just say it's 2.5 billion. So 2.5 times 55, 137.
$137 billion market cap.
Yeah. That's 2 years away. But yeah, I mean, you think about it,
and at the same time, it's $55, right? So it's like you're getting a lot of premium. You could also
the only thing that would concern me is if they were to actually start buying back stock, which right now they don't have enough money to buy back a lot where it would actually make that big of a difference. But anyway, what were we saying? January what?
There's a lot of retail hype. So you actually look at the closer look at January of 2025, what the calls are, and look at like the $50 or something like that, 50, 45, because I mean, if you there you go. That's all you need. Look at the goddamn premiums, and the theta decay on these things is going to be massive over the next 90 days.
Those were puts.
Puts? Okay, so let's see. Calls. Okay, they're not that. All right. I was like about to say, I was like, God damn.
That's what I'm saying. I honestly think that they're pricing in the short term a pullback because they're not as lucrative as it was for the fact that this ran up from literally $24 to 37 over the past month and a half. The fact that these premiums haven't actually gone, like, what is it at in terms of implied volatility? 49% of implied volatility. Like, that's a way, like, for the past 3 months, that's way lower than you would expect. So I honestly think that they're pricing this to pull back in the next. So for anybody that's selling calls, I think you'll do well. And I think a lot of people are forgetting, like, my calls right now, I think of 33, 34s. I had to roll them. So if you think about it,
how much premium did you get?
Well, I've been rolling since $30. So I've been rolling a little bit, but so I'm not in the profit at the moment for those. I'm technically underwater, but I mean, technically I still have a little bit of profit on the top, but I don't remember what it is. It's been a while, but regardless, I mean, I basically need this to go below $39 at this point, because I think it's they're about even with what I sold them at. So
the good thing is that there's tons of
start to be able to call back.
The good thing is there's tons of liquidity. So
there is lots of liquidity still.
Yeah.
But you're right, man. I mean, I should start thinking about that, because especially now that I'm getting to a place where I almost have, like, I don't want to say retire early money, because I'll never retire, but it's like just being able to use that. And I think you're right. I would think when you have that ability, because I was looking at the SPY, so let's pull up the SPY again. So if you think about this, actually, I literally looked this up when you were talking about Palantir. This is what I pulled up. So I pulled up the January 2027. Sorry, I'm still showing my screen. Good. Okay. Puts. And I was looking at the 570s, and they're only $4,700.
Yeah.
So if you think about it, your break even is 524. I see a world where we pull back, because you think about it, you're basically saying that within the next 2 years, we won't have a more than 10% pullback,
especially with the current valuations where they are.
Exactly. So it's, if you look at this, it's like we're at, let's just say 570 to make it easy, but 524 divided by 525, whatever, it's the same number. You're basically saying you're paying this you're basically paying 8% up front, and saying that within the next 2 to 3 years, we're not going to have a 10% pullback. It's almost like, to me, I think that that's guaranteed, right? Like, there's always going to be a 10% pullback within, not guaranteed, but you know what I mean? Like,
but if it runs higher, then, then a 10% pullback is not the juiciest thing. So I don't know, man. I think at this point, I would just stay out of SPY for a little bit and just invest in China. That's what I'm doing. I love SPY. Don't get me wrong. American markets, yay. But China's where the value is, so that's my hedge. So,
I hear you. Yeah. I hear you, and I'm kind of confused as well what to do right now, because, I thought, I'm just going to be honest, I thought, I don't want to say an oracle, but I thought it was an easy trade to go into the 20-year and just wait for rates. And I think it still might be the play, because people are feeling out how quickly these cuts are going to happen, that the 10-year pulled back a little bit in terms of the yield. And so with that, mortgage rates went up a little bit again, and same with the TLT. Those rates went up a little bit again, and so TLT on its own I was expecting TLT to kind of continue to go in one direction, and here we are. I was expecting it to go from 100 to 105 after we cut, and here we are. Pulling back a couple percentage points. It's not like
telling you, it's that damn SEP. That summary of economic projections, which basically said that 10-year would, like the 10-year. Not 10-year, the federal funds rate would be closer to 3 for a prolonged period of time. So if it's at 3, that means that 10-year is going to be at least 10, which means that now you're 20 and 30. I mean, not 10, sorry. Your 10-year was going to be around 4, which means now your 20 plus is probably going to be like at least 4.5, if not more, So that means that right now, if you're in the TLT, it's overvalued,
Yep. No, and then from a mortgage perspective, going back to what you're talking about, it's generally on a 1 to 3% spread above 30-year mortgages are generally a 1 to 3 percentage point spread above the 10-year. So like what you stated, if you're at a 4% on the 10-year, then you're looking at anywhere between 5 to 7%, with 2% generally, in a cutting rate environment. It seems like 2% is probably where it's going to be. So that means you should be at 6%. So that means that where we're at now is probably where we're going to stay unless you see that terminal rate go below. And I think we're just so obsessed with where we've been over the past 15 to 20 years since the great financial crisis that we are so used to 3% and 4% mortgage rates because so many people were in it for so long that we got spoiled.
Yeah. This is what Matt is talking about. If you want to put the Midwest Cannabis comment down, we can see a little clearer. You can see that the spread between the 10-year and the 30-year mortgage is pretty much like right in line with each other, right? So if 10-year goes down, usually you'll see 30-year mortgages like the thing come down also. So if you look at like over the last 10 years, mortgage rates have been waffling between 4 and 5%, but primarily because the 10-year has been kind of like between 2.5 and almost 3 at some points, right? But it's never been more than that. So if you think about it, in 2019 or the late 2018, we had mortgage rates, the 10-year at 3.2%. So the mortgage at the time was about, about like 4.9, right? 4.8, 4.9, which means that now if the long-term projected target for the federal funds rate is 3%, then that means 10-year is going to be probably 4, right? Which means mortgages might stay around 5 or 6. I don't believe that, to be honest with you, Matt. I don't believe that at all. Okay. I think that's bullshit. That whole thing that like I said, the Fed is always wrong. Like I write it in my dictionary now, just like the Fed is always wrong. Because if they weren't wrong, we wouldn't have these market cycles. I think we're going to get massive amounts of disinflation and even now deflation. And then they're going to have to cut all the way back to what they were before. They just demographically, we're already starting to see the impacts of, well, number one, people are having less kids. So that's deflationary. The entire world is in a deflationary cycle. And then you have AI coming along. AI is technology, which is huge deflationary wave. So all these people saying, oh, you know what, we're like the new normal is 3% bullshit. I think it's probably going to be closer to like 1 or 2 on the 10-year. Probably. We'll see.
1 to 2% on the 10-year?
Mm-hmm. Yeah. You're going to see, I'm telling you, the second half of probably the 20s, we're going to see a massive amount of deflation, especially with all these homes that are going to be coming on the market from baby boomers retiring. And it's just going to be a huge transfer of wealth. But then also at the same time, the U.S. government needs it, or at least they're probably banking on it. That's why they're spending so much money recklessly, because they think that, oh, rates are just going to come down anyway in the future. Let's spend the money now. Who gives a shit? I mean,
it makes me think a little bit. I mean, I think that we'll get a better economic picture as to where the terminal rate is going once we exit 2024 and go into 2025. And it might take the first 1 or 2 rate cuts into 2025 to start to actually see where the economic trends are heading, the macroeconomic trends, and if they're actually starting to reverse a little bit, like how, if we continue to see a worsening in unemployment and were still cutting rates, then I think that it might price in a lower terminal federal funds rate. And if that's the case, then you're right. The 10-year might start to edge lower faster, which then might lead to lower mortgages, etc.
So it's kind of funny. This guy Austin, he just brought up something. I was never rich enough to do SB locks before. Now I'm rich enough to do SB locks, and definitely worth looking at. Where the price of the stock portfolios now hit a point where now you can actually go in and get an SB lock, and basically the SB lock is going to be cheaper to borrow from, and basically you could buy real assets with that money, and do other things with it and generate cash flow, but then not have to sell your stocks, and your stocks are going to be going up at a faster pace than the cost of that capital. So it's almost like you're levering your stock positions, not having to sell anything. The thing is that it sucks for retail investors who don't have like that million plus, because I think that's what you need right now from most of the brokers. Like you need $1 million before you can even smell an SB lock. So it's like I said, it's going to be beneficial. And the thing is, for you're sitting on all these mortgages. If the rates drop low enough, SB locks might actually be more cost effective than the current mortgages that you have, right?
Yeah.
Especially
if the mortgages, been thinking about that.
Especially because the mortgage interest tax credit wouldn't work out very well for you unless, because I mean, you're mortgaged up with 3 different mortgages, right?
Mm-hmm.
So you can only write off the one for your primary address for the mortgage interest tax deduction, or can you do it for all of them as long as it's below 750?
Technically, I could do it for all of them because they're investment properties. So technically, I can write off that interest against my normal income.
Gotcha. Yeah. Okay, gotcha.
So it's nice because we barely make any money on whatever rents we make because we're able to write it off based off the interest. So it's nice because and then we have deductions like depreciation on those properties as well, which we can span over 27 and a half years. So it's kind of nice because any money that we make from that is likely to be pretty cheap. It's actually pretty interesting. We were looking at refurnishing some parts of the houses, and people are starting to offer 0% again, which is nice. They were obviously a couple of years ago, but it kind of went away. Now they're furniture stores are offering 5-year, 60 month 0% again, which is nice.
Nice. That's kind of crazy.
I was like, damn, because I was like, we could spend up to literally. I was thinking about this. I was like, we could literally spend up to close to $6,000 and pay $100 a month, which I'm like, because you think about it, it's like, what can you do and spend $6,000 to increase the rentability of your home? And it's like, add more beds, add a king size bed instead of like a single bed, things like that, where you're like, people will pay $20 more.
Yo, let me know which furniture store is giving you 0% for 6 years, man. I need to buy a couch.
Ashley Furniture, man. Yeah.
Let me take a look at this. Hold on.
Yeah.
Ashley Furniture. I mean, they're definitely marking it up a little bit, but let's see.
Yeah. I was surprised because normally Ashley is like expensive because I never normally shop there. I normally, do something else because of how expensive it is. But
holy shit, 0% interest, 60 months.
Yeah.
Jeez.
So I was thinking, we have we have a pool house in the one property, and it's literally a single bed with a trundle. So it's literally 2 people can sleep in there. And we were like, if you put a king size bed in here, not only will it give you a second king, which obviously, people love king size beds, especially if you're a couple, right? You want your space. So not only will that help increase the value of the pool house, but then we were thinking, well, we don't want to get rid of, let's just say, a kid's bed for the kids to sleep in. So we're thinking about putting another full size bed and a twin bunk bed on top. So basically going from 2 sleeping arrangements in the pool house to 5. And that obviously, if you think about it, it's like, if you could do that for $5,000 less and do it for 0% over 60 months, why wouldn't you, right? Because think about the rentability of that. I mean, investing in something like that is pretty badass. Anyway.
Yeah. Someone said Chris only shops at Restoration Hardware.
Chris is rich, man.
One of the things that I wanted to do in the future, did I tell you like one of the hobbies that I want to take up? See, I don't have a house right now, so I can't do it. But in the next couple of years, I'm going to buy. So I want to actually build a workshop either in the basement or like a separate unit that just has nothing but like woodworking tools, and basically just do like woodworking where I'll get like furniture from like Facebook Marketplace or whatever, and then like fix it up, repair it, and then just donate it to charity. I don't want to take money. I don't want to make money off of it. So I just like, I'll tell you who inspired me to do this. We had like this, like my brother-in-law who used to live like near us, he was leaving, like he was going to a house, so he had some old furniture. So we, he's like, hey, do you guys want this? We were like, okay, you're close by, we'll take it. So we took it, and then it kind of like, we needed the space, so we wanted to get rid of the furniture. And so the thing is, we didn't want to just, it was good furniture, so we didn't want to just toss it out. So my wife, I think she put it on Facebook Marketplace or something for like $0. And like someone came to pick it up, and I got to talking with the people who came to pick it up. It turns out they were from like a church group. And what they would do is basically, go to like scour Facebook Marketplace for deals like this. And like, so the husband used to be part of the Air Force. And so the family actually came and they took apart like the bed and everything. And they took it so that they could use it for like one of their church members, how they needed like a bed with, because their house had just gone on fire. And so basically they needed, somewhere. So I was like, man, how many people like, because I experienced a house fire when I was a kid. Like when I was a kid,
I
was in the 6th grade, and we had a house fire and we lost pretty much everything. So I remember for like almost a year, we had to live at like one of my uncle's places, and you literally have to like rebuild everything. You have to buy everything. And the thing is, all of that stuff costs money. So, my thing was, to one person, something like this is like completely like, there's no value, but to another person, like a bed with a mattress, that's huge value. And I remember me and the wife, we'd kind of gotten to Bed Bath and Beyond, and we kind of before when it was going into when it went to bankruptcy, so we like bought a whole bunch of like bed sets and all this other stuff. So I gave him some of the bed sets. I was like, no, here, take it. It's brand new. It's really nice. It's like Pima cotton, which was like really expensive, but we got it at a discount, so I didn't mind. I was like, oh, if it's for a good cause. So it's just great. Though it kind of restored my faith in humanity a little bit, and saying, you know what, there's actually still good people out there. Not everyone's out here to just, sucker people and make a buck off of you. Like this guy, he didn't have to do any of that stuff. He could have just said, you know what, my Saturdays are way more important. I could just be watching TV. But no, instead he brought his kids and his wife, and they did it together, which was really nice, because it was like, wow, there's good people out there like that. So, so to me, I think that's one of the things I would do is, I like working with my hands. I want to actually do more. It's just, I grew up in an apartment my entire life, so I never really got a chance to. But one of the things, like as a relaxing thing, I watch like restoration videos. So I'm like always taking notes in my brain, like, okay, yeah, like this is the kind of like surfacer I'm gonna get. This is the kind of planer I'm gonna get. Like this is the kind of like what is that thing called? Like jigsaw that I'm gonna get. It's kind of cool, and hopefully it's something that I can turn into like a like a side thing where it's like, what, I've got free time and I've got passion to do this. So I'm going to take it, restore the furniture, and then donate it, to like church groups and to people, so that this way, people have nice things to, put in their house,
Yeah. Well, I appreciate you sharing that story, man. That's, I knew a few people, unfortunately, when I was growing up that lost pretty much everything in house fires. And I had no idea that happened to you. That's awful to hear. So
yeah.
Glad
I'm the one that caused it, by the way. I'm the one that
really? No wonder why
you're
the favorite.
I'll tell you exactly what happened. So my mom thought it'd be a good idea. It's like, oh, you know what? Maybe I could teach him how to make French fries, because I like French fries. Like, all you have to do back then, we didn't have air fryers back then. Like, you literally had to take oil and put, fries in there. So I took, so I thawed the French fries like I was supposed to. I heated up the oil, and then I put the French fries in the oil, and you know, I'm waiting there, and this thing is like taking time. So I'm like, oh, let me go just watch like a couple of minutes of TV. And I don't know what it was. Dragon Ball Z at the time was really big. I was watching Dragon Ball Z, and like a fucking moron, I completely forgot about thing until I hear and I go in there, and there's like a giant fucking fire, like an oil fire.
Man.
Now it's not bad enough that there's an oil fire, but the thing is, I was a stupid kid. What's the first instinct you have as a kid?
You put water on it. Yeah.
So I took my mom the biggest freaking thing of water. I filled it up and I just threw it on there. And man, let me tell you, the minute that water hit that fucking burning oil, it just went, you know, and basically burned like my mom's cabinets. Those all caught on fire, and I just ran outside. The neighbors all like called you know, the fire people came in, and the thing is, the fire people, they went to town on the place. So we came back and everything smelled like smoke, and it was really bad. It was really bad.
Oh man.
You know,
I'm glad you guys got it. Nobody was hurt, I hope.
Yeah. No one. I mean, I was mentally,
your ego was hurt.
You know, and so when I was selling my condo a few months back, right? You know, with the disclosure statements or whatever, and I was like talking to the buyer at the closing. I was like, you're basically getting a brand new kitchen. She was like, why is that? It's like, I don't think I've ever really made anything. Like, because I am scarred by like the cooking process that like, because the thing is, I had gas burners, right, in my apartment. Right now I have like, what is that thing called? Like the ceramic heating thing. You know, I don't know what it is, but basically you can't freaking like start a house fire with that, basically. Yeah. You know, it's like idiot proof at this point. But with my house, so I always have this like predisposition not to like cook with gas, but the things, that's all it was. So yeah, so she was like, oh, how many times did you cook? I was like, maybe like a few times. I've made some eggs, you know, and I'd stayed there the entire time. I'd like turn off all the TVs and stuff, because I do have a little bit of like like ADD when it comes to like just watching stuff when I was a kid. So no, that happens.
Man, yeah. Luckily nobody was hurt, but it's the dangers of cooking. My sister was just telling me not a joke, but a story about something similar where, they're trying to teach the kids to cook, and almost something similar happened. So luckily nothing bad happened. But
before you teach your kids how to cook, teach them how to put out a fire.
Yeah, I was about to say. I was like,
start with that.
I was like, that's baking soda, or is it baking powder? I forget. And then definitely not water on oil. That's for sure. Yeah. Cool. Well, let's end it there. Appreciate the 120 some of you coming in. Please, for the great thank you for the 10 members. That was awesome. For those of you guys that haven't subscribed yet, it's completely free to join in on the chats and everything of the like. Please be sure to do that. We got 1,541 of you already. It's been a blast. Kicking this off for season 2. Mr. Patel, anything crazy? I do want to check you behind the scenes, but anything crazy before we sign off?
No. I mean, once I get this woodworking thing going, the first few things I'm going to do is I'm going to build coasters, like like drink coasters. So I'm going to personalize them, and I'll send you like a personalized set of drink coasters. I have everything in my brain already. I'm going to get some pallet wood. I'm going to trim everything. I'm going to like resurface it. I'm going to get a planer, do all this stuff right. I'm going to send you some coasters, so get ready for your coaster. It's going to be a while though, before you get it. So
yeah, no worries. I'm looking forward to it. All right, everybody, I'll catch you guys on the next stream. Any particular day, Mr. Patel, or we'll wait until next week to figure it out?
Yeah, we'll wait till next week to figure out. Unless there's like some economic data that we need to keep up with.
Not that I know of. We'll figure it out next week. All right, everybody, talk to you then.
Later.